Let's keep going. Looks like our first question on this handout is for a journal entry. It says Joshua Scott invests $40,000 into his new business. How would this transaction be entered in the journal in good form? Let's focus instead of completely on good form. Just what are the debits and the credits? Okay, how is this transaction going to impact the overall accounting equation? So I want you to understand that we are going to do this journal entry from the perspective of the business, okay, not from Joshua Scott's personal financial records. So from the business's perspective, what is increasing for the business? The answer is cash to the tune of $40,000. That's going to be our debit. Then what else is increasing? The amount of common stock that the business has issued, $40,000. And then we would put some kind of a journal entry explanation here, issued common stock for cash, something like that. Because again, this is from the business's perspective. Okay? They received cash of $40,000. That's the asset that goes up with a debit. Common stock is the credit that goes up to balance out the debit side of the transaction. All right, let's see what else we have here. This transaction here, May 24th, we actually have a decent example here of a journal entry in good form. Takes place on May the 24th, and looks like we are purchasing land, and we're let's see here, what do they want to know? What effects does this journal entry have on stockholders' equity? Okay, very good. So looks like we're buying land. Land is going up by $105,000. Cash is going down by $105,000. So let's look here. It says choice A, increase cash and increase land. B, decrease cash and increase land. C, decrease cash and decrease land, and D, none. Okay? A lot of students will look at this and want to mark choice B, because cash is going down and land is going up. But this is an incorrect answer here because it doesn't have anything to do with stockholders' equity. What effect or effects does this journal entry have on stockholders' equity? None. We are simply increasing one asset and decreasing another asset. So there is, when we include this part right here about stockholders' equity, the answer is D. It is true that cash is going down and land is being increased, but that's over on in the assets portion of the balance sheet. Cash is a current asset, land is a long-term asset or non-current asset. So D is our correct answer. Next question, which of the following entries records the acquisition of office supplies on account? Okay, choice A says office supplies debit, cash credit. B says cash debit, office supplies credit. Choice C says office supplies debit, accounts payable credit. And D, accounts receivable debit, office supplies credit. Okay, so if we know anything about how to record business transactions, and we know about normal balances and so forth, this is a ridiculously easy question. So if this is not a ridiculously easy question for you, that's okay, but we need to learn. Okay, so let's see here. Choice A, office supplies debit. That is correct, at least this part of it. However, right here's where we have a problem. We're purchasing these supplies on account, which means we have not paid cash for them yet. Eventually we will, but that's not what is happening at the time of the transaction, so therefore A is not our correct answer. Choice B, cash debit. Well, there's no cash involved at all here, and certainly cash is not going to go up with a debit in any way, shape, or form with regard to this transaction, so B is also wrong. Office supplies debit. Well, if that was true up here in A, it's true here as well. Accounts payable credit, this is what would take place. Our asset, office supplies, is going up with a debit, okay? But so too is our liability account, accounts payable, because we're purchasing it on account. Choice C is the correct answer. All right, next question says simply revenues decrease assets, increase equity, decrease liabilities, increase expenses. I really hope that you can get this right. Now, I will say this. If we're talking about sales revenue, a lot of times when we use the word revenue, we're talking about service-related business. But I will say this. If we're talking about sales revenue from a merchandiser, revenues actually will decrease assets, and we'll talk about that later. But that's not, in the spirit of this question, that is not the correct answer. Okay? Revenues do not do anything to decrease expenses. I'm sorry, to decrease liabilities, and revenues technically can increase a certain type of expense, but we're not to that yet. So for what we're talking about with the example that we have been dealing with, which is a service-related business, we're going to increase equity. So think about the transaction that we looked at. Net Solutions provided services that totaled $7,500, and they were paid for those services, and so that increased equity. We had another example where they provided services on account for some amount, $3,100 or something like that. Well, that also increased equity. And then when they received the cash, we just transferred one asset out for another. Okay, so revenues, particularly service revenues, if you can read my writing, whether we get that in cash or we set up an account receivable, increase equity. Let's look at expenses. It says expenses, A, increase with a credit, B, are a liability, C, decrease equity, D, increase assets. Okay. So again, there are a couple of these that are blatantly wrong, specifically the first two. Expenses increase with a debit, not with a credit. And expenses are absolutely not liabilities under any circumstances. The first two, no matter how deep we get into accounting, those are always going to be wrong. Our correct answer in this case is C. And what we're talking about here are items like wage expense, utilities expense, where we have a recurring expense item that we are just simply, as we incur the expense, ultimately assets are going to go down, namely cash. Okay. And then for our purposes, D is also going to be incorrect. If you get deeper into accounting, we can make a slight case for D, but the key to answering any multiple choice question is always to select the best answer, and C is by far the best answer here. All right, so now we're down at the bottom of the page, March 10th. We have a transaction. Accounts payable goes up by $800. Cash goes down by $800. Paid creditors on account. Okay. What effects does this journal entry have on the accounts? Let's see here. What do we have? Decrease accounts payable, increase cash. No. First part is right. We are decreasing accounts payable. We're not increasing cash. Increase accounts payable, decrease cash. That is, this part is right. The other part is not right. And then finally, increase accounts payable, increase cash. That's not right. And then D, none. All of these answers are actually wrong. I'm going to assume that what we're having here is accounts payable would go down and cash would go down. So I'm going to assume that what we have here, instead of saying on the accounts, let's say on stockholders' equity. And in that case, the answer would be D, none. But as this question stands, all of these choices are actually wrong. Okay, so either we're missing the right answer, which would be something like this here, or they have misworded the question, and the answer needs to be D. I can guarantee you that A through C are definitely wrong. Okay? All right, so hopefully that doesn't cause too much confusion, and we'll wrap this video up and go on to another one.